Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. Well, I'm going to be Mr. Oxy to a degree because I'm thinking as we get close to the year end 2023, I'm going to give you a glimpse of what is in my portfolios in different places where I hold some of these equity investments and assets that are in my portfolio. So why don't we start off with by sharing a little world map. And I've circled most of the countries here where my primary assets are. And I've tried, it's not drawn to scale, to give you an idea as to where the majority of my equity assets are located geographically. So the large circle, because this is the bulk of my investments, are in Canada and the United States. Brazil, you might recognize as the home of Petrobras, and I'll come back to some of these equity investments in a minute. This smaller circle here is Mexico. This circle here in the middle of Northern Africa is Niger. Of course, a few months ago, there was a coup in Niger, so my uranium assets in Niger are somewhat on hold. The smaller circle down here in Southern Africa is Zambia. This is mostly uranium as well. And this little outlier here, top right, is Russia, because I still have a significant number, not so much in terms of value because I'm under US sanctions as I'm making this video, but I do have quite a few thousand shares of Lukoil, the Russian oil super major, and hopefully sometime in the future, maybe before I'm, sort of the same age as Warren Buffett, the United States will lift sanctions against Russia, and maybe the war will be over and everybody will be able to live in peace, and I'll be able to add some more shares to my Lukoil position that I currently hold. So when you look at the sort of 6 red circles that are on the screen here, let's take a deeper dive and I'll show you where I hold some of these assets. So approximately half of my equity investments are held in global equity investment accounts because I'm a citizen of the world. I'm actually a citizen of multiple countries. Although I reside in the United States, which means I'm a US tax person, I do hold equity investments in other countries too. The majority of them are in Canada. And one of the reasons for that is I lived in Canada for about 10 years. So I have roots in Canada, plus I have family in Canada. Now, when you look at this sort of international portfolio of mine, you'll see from a geographical point of view that in my international portfolio, approximately half of all my equity holdings are Canadian, 35% United States, and this 8% Brazil here is actually almost entirely Petrobras. The fractions of percentages in other countries like the United Kingdom, Singapore, etc., are actually as a result of some ETFs that I hold in my account, and those ETFs have some international positions rather than me holding them directly. An ETF, in case you can't remember, is an exchange-traded fund, and that fund consists of a variety of different, typically blue-chip equities. If we look at the actual holdings in terms of the sectors where they belong, you can see by far my greatest position, 70% nearly, is in energy. I remain an energy bull, and I will probably be long energy regardless of all the peaks and valleys and dips and crashes and political interference by people who want to shut down fossil fuels and release all the fuels in the Strategic Petroleum Reserve in the United States and tell you that the world's going to end because of the climate scam and all that kind of stuff. It doesn't matter. For the next 50 years or so, which is way beyond my life expectancy, we will be utterly dependent on fossil fuels. And for that reason, primarily, I'm invested heavily in energy. Although, to be fair, some of my energy investments include uranium, which is the cleanest, most efficient, best energy resource known to man. So if you are primarily focused on global warming and climate change and things like that bother you, and you still want to benefit from investing in energy, invest in uranium, and you'll probably be okay. I have some financial services stocks, so almost 15%. I used to have a lot more, but I've exited all the banks. I don't want to be in any bank right now, especially not a smaller lender. So any of the smaller banks, especially in the United States, commercial real estate is crashing, and all the smaller regional banks who hold the notes on those commercial real estate properties, whether they are offices or strip plazas, strip malls, etc., shopping centers, are in deep, deep trouble. So I don't want to have any paper that is currently underwritten or underwriting commercial real estate. I don't want to be anywhere near that. My financial services holdings right now are primarily life co, so insurance type companies rather than banks, right? So I don't hold much bank stocks at all anymore, although as you can see, I still have some. Basic materials, 9%. Obviously, basic materials includes uranium, and then just small little fractions of everything else. I do not own directly any healthcare stocks. I want nothing to do with companies like Pfizer, who created the vaccine for the pandemic. I wouldn't invest in them at all. But some of the equities that I hold include ETFs, and they invest in companies like Johnson & Johnson, Pfizer, etc. But these are just little slithers of the total investment. The primary investments are energy, financial services, and basic materials. What do they look like in terms of the actual holdings? So 73% are equities I hold direct. In other words, these are stocks we've talked about many, many times before. In fact, at the beginning of this video, I mentioned Petrobras as one of my energy stocks. I have many. I have Devon Energy. I have Occidental Petroleum. I have Energy Transfer. I have several. So I have a whole basket of energy stocks across a number of different upstream, midstream, retail, etc. Refining. I hold a little bit of everything, pipelines, etc. The 22% ETFs is higher than usual, and I usually sort of park some money into ETFs when the market is very volatile, because it's almost like a little bit of a safety net, right? The ETF, by definition, is more diversified than my traditional holdings, right? So I just mentioned my energy portfolio as an example. By holding XLE, I extend my energy portfolio by investing in XLE, which is an ETF. It's 20% Exxon, 20% Chevron, and the other 60% great energy companies. And then I also hold ETFs like, for instance, VYM, which is a market ETF that tracks the S&P 500, which means I have the ability to invest in stocks like Apple and Amazon and Google, etc. But I don't have to hold them directly. I just buy the ETF and hold it. It's not unusual for me to take some cash off the table and take some profit, park it in the ETF for a while, sit on it, and then when I see a buying opportunity like Occidental Petroleum for $10 3 years ago, I jump in boots and all and buy some of that. In my global portfolio, I hold less than 5% cash, and you can say that's probably sort of in line with where many money managers are right now. Many of them actually would sort of hold 1 to 2% cash. And then, of course, cash takes different forms as well, because cash doesn't necessarily mean dollars in the bank in terms of an American taxpayer. It could also mean positions that are equitable to having cash in your portfolio. So what does the performance look like, right? So we all know that energy kind of struggled throughout 2023. In fact, the last time it was high was sort of in March, April of this year. And after that, it just declined in the price. For instance, for WTI, it's been hovering around $70 a barrel, which is significantly down from where it was a year ago at around $130 a barrel, and even much, much lower than what it was early this year when WTI was trading at sort of $90 to $100 per barrel. So what you gain on the swings, you lose on the roundabouts, or something like that, right? So if you look at the actual portfolio performance here, and I've just included some of my largest positions, and what you see here is from a materials point of view, I hold a large position in Colonial Coal. Cameco is a uranium producer. And then I have my financial services company, which I mentioned is Sun Life Financial. It's a life co. XLE I talked about. VYM is the market ETF. Petrobras, we all know, is the super major in Brazil. And Devon is my big loser down here at the bottom. So when you look at the portfolio as a whole, you can say like, man, I have a few stocks that have really, really struggled, right? XLE is not so bad because it's pretty much just flat. But look at Devon, down 14% for me. This is awful, right? No, it's not. I could just hold Devon. I can hold Devon for the next 5 years. I'll be all right. In the meantime, while the price is low, I'm actually just absorbing that nice, wealthy, juicy dividend that they pay me. And I'm buying more stock because my Devon position is enrolled in a DRIP, which is a dividend reinvestment program. So every time I receive a nice big juicy dividend, I'm just buying more stock at that low price of around $45 or so per share, adding to my current position and probably reducing my cost basis as I go along, unless the price of Devon goes higher. than my current cost basis, in which case I'm still adding more shares and just building that position over time. Of course, from time to time, when these stocks pull back sharply, I might even buy more. So I put some of my cash to work and I'll buy some more of that particular stock. So how do we look overall? Well, you can get the picture here on the right-hand side, right? So assuming, just for the sake of of argument here, if you would, that this is an equal weighting, and it actually is, except that I have a lot of Colonial Coal right now, because Colonial Coal is a company that is on the verge of being sold. I don't know when. You know, people ask me for comments in our investor channel and say, when is Colonial going to be sold? I don't know. It's been a few years, right? The first thing that held them back was the COVID pandemic, and then after that, right next door to them, Tech put up a coal mine for sale that was already producing, which obviously drew all the attention away from Colonial. But those two things are out of the way now. The pandemic is behind us for the most part, and the Tech deal is closed. So that acquisition has happened a few months ago. So now buyers are free to explore Colonial, which is met coal in Canada. The others are sort of relatively equally weighted in terms of my investment in these particular equities. So you can see I've gained nicely on some of them. So Petrobras is up quite a bit, and Cameco is up quite a bit too, and the others are sort of flat, and then I have one loser. So overall, my portfolio is fine. And in addition to that, when you look at these stocks, the majority of them, with the exception of Colonial Coal, pay me a nice dividend. In fact, the smallest dividend that I receive here is from Cameco, because I think the dividend right now is only about 1.5% or 1.3% or something like that. But it's also my best performing stock because it's up almost 100% for the past year. So by the way, this is a 1-year date range. So you can kind of see what my portfolio looks like at a glance. I'm not day trading. I'm not getting in and out of positions. Remember, time in the market is better than trying to time the market. Every equity that you invest in does not have to be a winner. You only have to have one or two. And if you can get an outsized winner, like for instance, if I could be fortunate enough to get a 5, 7, 8x on Colonial Coal, it right sizes the entire portfolio on its own, even if all the others were hopelessly in the red. So I'm not too worried about that. Now, I am a US tax person because I'm resident in the United States. So most of my equity holdings outside of my global portfolio are actually domestic in the United States. How much is most? So here's a little graph, and I think this little pie chart on the left might be a little bit confusing. So let's look over here, and you can see my domestic equities are almost 60%, and the international equities around 8.5%. So this, if you add them together, effectively is less than 70%. So where is the rest of the investment? Well, right now it's actually in cash. I'm sitting on about 24% cash, which is an outsized cash position. And remember, cash is always cash awaiting investment. So here I'm kind of sitting on my hands and watching the market and watching it very, very carefully. If something really crashes, but the fundamentals are good, right? So if you think of Occidental Petroleum 3 years ago when it was trading at $10, if Occidental Petroleum were to crash to $10, unlike Mr. Warren Buffett, whom I admire, who is buying Occidental Petroleum at $60, if Occidental were to crash to, let's say, below $30, I'll deploy some of this cash awaiting investment and I'll buy some more Occidental Petroleum. Until then, I'm not going anywhere near it. I wouldn't touch it. Not at the current price, right? So here we look at my 8 biggest movers, right? So what I'm doing here is I took a snapshot of the market. This was yesterday. And then I look at my positions. These are the 8 biggest movers as of yesterday. And you'll recognize some of these. I just talked about them. So Colonial Coal was up quite a bit yesterday. Some of this is fictitious because it's over the counter, so OTC. And what you really need to do if you want to look at Colonial is look on the Canadian exchange, CAD.V. And then you can see whether it's actually moved or not, because this number isn't always necessarily correct. I'm not saying it's incorrect. I'm just saying it's not correct in terms of the day's trade, this 13%. This is some uranium. So GoviX popped yesterday a little. TD is a financial services company. TD Bank, Toronto Dominion Bank, is a Canadian bank. Devon went up nicely yesterday, almost 1%. SPY is one of those ETFs. that I talked about, including on the previous video. Enbridge is a diversified energy stock out of Canada, 1.3% yesterday. VYM is another ETF. It's a market ETF. It tracks the S&P 500. So you can look at that one too. It's got some blue chip stocks in it, and yesterday was a pretty good day for this particular portfolio. How about the biggest holdings, right? So here you can see at a glance, it's energy, man, and energy, and then some more energy. XLE, right? 11% of my portfolio. Energy Transfer, 10% of my portfolio. Petrobras, Enbridge, tucked away under my pretty little picture here. Colonial Coal, 6%. This is met coal. Occidental Petroleum, only 5%. I've sold some Occidental Petroleum, so I have less Oxy now than what I've had. In fact, my holdings in terms of the number of shares is at the lowest it's been since 2021. Devon, 4%, right? So Devon is a big loser for me, but it's also only 4% of my portfolio. The big money is in XLE, which is the ETF. So Exxon, Chevron, plus a few other good, great US oil and gas energy stocks. Energy Transfer, 10%, Petrobras, 10%, right? So these are my top 10 holdings. So when you look at the performance, and this is sort of the US snapshot for the last year, you can see the underperformer here is crude oil, right? So on this one, I had both the good fortune and the bad fortune of being in the energy market because energy went down collectively, and the good fortune of buying back into Petrobras at a relatively low price. I bought the Petrobras PBR.A, so the preferred shares, and my cost basis there is about, it's just under $13 a share. So I had the benefit of the uptick in Petrobras since then. I think it's currently trading at around $15 or so per share. So that's been a nice little uptick. And of course, earlier on in this presentation, I showed you Cameco, which is up almost 100%. So my uranium stocks have done particularly well as well. So even though energy has underperformed the indices, the actual holdings in my account, including my ongoing dividend reinvestments, which I do on an almost 100% basis, right? Like nearly every single equity that I hold that pays me a dividend gets reinvested into more stock, right? And from time to time, I exit some of my positions, take a little bit of profit off the table, and then withdraw some of that cash because I don't have an income. I'm unemployed, right? So if you earn an income, you have to pay income tax. If you use your tax loss harvesting as a way to liquidate some of your assets, then you can draw some of the cash in your account and effectively mitigate the tax implication of that. So it's kind of a snapshot, right? I just wanted to share with you sort of what I hold. It's almost the end of the year, so you can see sort of what my positions are. They're pretty much the same as what they were at the beginning of the year. In the early 2023, I did sell Petrobras because I was selling it for profit, and I generated some cash because I wanted to get into some mining stocks. And a couple of the sort of junior miners, penny stocks that I got into include Colonial Coal, which I've spoken about a couple of times. But you can also look at Sierra Madre. It's a silver explorer, which is about to go into development. They have assets in Mexico. It's one of my most recent additions. And I actually interviewed Alex Langer, who is the CEO of Sierra Madre, in a video just a couple of weeks ago. And I'll post a little thumbnail to that video here so that you can view that one as well. When I say here, I mean like here, or here, somewhere. Anyway, that is it for now. So that's in my portfolio. It's pretty much the same as it was at the beginning of the year. So I hope it's not too boring, but that's what I hold, and that's what I'm going into 2024 with as of today. Take care, and I'll see you soon. Bye-bye.